Good morning, ladies and gentlemen. As noted, my name is Rich Munson. I'm CEO of SANDSPRING Resources, and I've been CEO of the company since we came to the public market in 2009. However, as indicated, my partner and I started this project back in 1999, and we've been with it ever since, and we're with it until this goes into production. So, as some people say, we're committed management. Other people say we should be committed. We're not sure which. So, in any event, we came out with a pre-feasibility study in 2013. We have a 10 million ounce resource, and there's 4.1 million ounces of proven and probable gold at Toraparo. And let me see if I can run this today.
Arrow down?
Yep, down. All right. Of course, I'll be making some forward-looking statements, and we reference you to the CDAR site, cdar.com. That's where, as you know, that's the repository for all public documents on SANDSPRING, as well as all Canadian traded public companies. So we've been around a while. We're still working. We're in the process of working on final feasibility. But why should you look at SANDSPRING Toraparo in addition to being just a 10 million ounce resource? Well, over the last 2 years, with the help of Wheaton Precious Metals and Frank Justra, two key financial partners for us, we've been working on trying to create some optionality for this project. It's big. The pre-feasibility study had a 16-year mine life of 225,000 ounces a year. And unfortunately, it also has a big price tag, $500 million upfront Capex. So we've been looking at ways to enhance the project. And so we've focused on, one, getting some financing through the Wheaton Precious Metals streaming agreement. Two, we've been working on methods to reduce our operating cost, which we'll talk about. We also have been looking at ways to start this project so you can start producing gold without spending the entire $500 million up front. This project also can get to be about as big as you want it to be. While we have 4.1 million ounces proven and probable in the pre-feasibility, there's 7.1 million ounces measured and indicated gold at this project. So we did the pre-feasibility with a little bit of a capital constraint view because we were a junior company, but other major companies can take a wholly different view, produce a lot more gold without doing much more work. And finally, we're a tremendous leverage to improving gold prices, and we'll go through a few of the numbers that talk about that. Where are we? We're in the country of Guyana. There's now a strong operating mine there. Guyana Goldfields has the Aurora project. And we're in the same geologic belt as the major deposits in Venezuela. I'm not sure there's going to be a lot of development in Venezuela for a while, but there's a lot of gold there, that's for sure. There's tremendous upside in terms of exploration potential here. If you look at this map and have it up in front of you, you could see that there's no indicated gold occurrences between where we're at in Guyana and all of those tremendous deposits in Venezuela. That's not because there isn't any gold, that's just because there hasn't been any systematic gold exploration. What do you get if you be a shareholder of SANDSPRING and an interest holder in Toraparo? Right now, according to our advisors, Bank of Montreal, if you look at the largest undeveloped deposits in South America, owned by a junior developer, SANDSPRING and Toraparo is number 2. Now, why is that important? Well, we're all hearing the bigger gold companies and the analysts talk about the fact that gold production's declining. Well, because of the downturn in gold, all the major companies stopped exploring. That was an easy thing to cut to improve their cost structure. It's also been well documented that from the date of discovery of a large deposit to the date of first production, you have a period of anywhere from 12 to 15 years. Now, the majors are starting back in the exploration work. The junior companies are starting to be able to raise some exploration dollars. But you also should take note that in 2013, a survey was done that determined that the average grade of large producing open pit gold mines in the world was just over 1 gram per ton. So if you look at our proven and probable reserves, which is in excess of 1 gram, and you look at our total resource of 0.85 grams, we're right in the ballpark for what would fit into future production plans. We're construction ready. As I noted, we're in the jurisdiction of Guyana. 2 key things there to note. Guyana Goldfields was able to raise $250 million to build their property back in 2015. Notably, the IFC, a member of the World Bank Group, led that financing. So if the World Bank can get comfortable doing business in Guyana, we think just about every commercial entity can as well. We're starting to see major changes in Guyana, largely due to a discovery by ExxonMobil of a very large offshore oil deposit. They've announced with the drilling of their 7th successful well that they have a resource base of 3.5 billion barrels of oil, and it's growing. You're seeing Barrick Gold come into the country. They're in 2 small joint ventures in Guyana. Zijin Mining has just taken a strategic investment in another Guyana company, Guyana Gold Strike. At our project, Toraparo, we've just renewed our environmental authorization. We have an executed mineral agreement, and we have infrastructure. As a private group, back in 2003, we built a 250-kilometer road from Tidewater to the project. So there's access, all of which we would improve to go into production, but all the backbone of everything that we need is in place. This is just to show you that this is a very conventional open pit mine, nothing unique to it. The main resource is here, and as I was saying, we have a large M&I of 7.1 million ounces, all in this area right in here. Here's the production profile from the PFS. You see that we start quite strong in terms of the grade of the ore fed to process, 1.65 grams per ton, and average 1.25 grams per ton over the first 5 years of operations. As I noted, we have a precious metals purchase agreement with Wheaton Precious Metals. It's a very standard streaming agreement. They have agreed to buy 10% of the gold. They pay us $400 for each of the ounces that they buy, but in exchange, they're bringing $150 million of the initial Capex for the project. Many people are very suspicious of streaming agreements, and you hear a lot of people talk about the fact that it really can impede the progress of a project. What we've done here is taken our pre-feasibility economic metrics and compared them before and after Wheaton Precious Metals. And because the project finance folks look at the Wheaton dollars as equity in the project, you'll see things here like our IRR and our payback are improved because we're bringing that amount of equity to the table. Even though our weighted average gold selling price is $1,300 an ounce versus $1,400 an ounce, which is where we did the PFS back in 2013. So we don't see Wheaton Precious Metals as being dilutive. We see it being an accretive deal for companies the size of SANDSPRING. The second thing that we've been working on that has really come into being a concrete part of our future development plan is a run-of-river hydro project. We've been looking at this for a while, but during the last year we were able to do enough engineering work to bring this to pre-feasibility level. And this is 50 kilometers southwest of us, and this falls right here is 300 meters. And it's in a very stable, as you might expect, geologic regime, very easy to construct. There will be no impoundment. There's no indigenous people issues here. Our preliminary work on the environmental assessment is very positive. And yes, it adds more to our upfront Capex, but it drops our operating cost by about $125 an ounce. Why so much? Well, we're going to generate a lot of fuel, a lot of power, and we're going to burn a lot of fuel. So fuel is 35% of our operating cost. And with this hydro, we can drop that fuel cost from near 20 cents a kilowatt hour to 4 cents a kilowatt hour. So a major change. The other thing we've been looking at, as I mentioned, was a way to get this project into production where you didn't have to spend $500 million to get the first ounce of gold out of the ground. We looked at ways of high-grading the deposit, but fortunately for us, our two strong financial partners, Wheaton Precious Metals and Frank Juster, said, don't do anything that impairs your ability to get the bulk of those 10 million ounces of gold out of the ground over the life of the mine. So what we've been doing the last 2 years is doing exploration for additional ounces, but importantly, ounces that are gold only, no copper in them, and that are very shallow and very inexpensive to process. And in the Guyana Shield, that means you're looking for saprolite ore. Saprolite is just surficial material that's been weathered because of being in the tropics, and it's sandy-like material. So to extract the gold from that material, you don't have to do any grinding. All you have to do is get it to a uniform size and then feed it into the cyanide leach circuit, and you're going to recover about 95% of the gold. Now, in our pre-feasibility study, we had a small cyanide circuit in place that we wanted to construct the day we began work on constructing the overall mining project. Unfortunately, at that point in time, we were quite limited in the amount of saprolite we had, and we only produced about 80,000 ounces of gold from the first 2.5 years of pre-construction operation, if you will. With the addition of the resources we've been able to identify over the last 2 years, now we can produce 200,000 ounces of gold in that same period of time. And I'll show you a little bit of what that can do economically to the Capex for the overall project and the amount of project debt we would have to bring. Here in this slide, we show you again what the analysis was for our sources of funding, et cetera, from the pre-feasibility. As I mentioned, in the pre-feasibility study, we produced 80,000 ounces of gold, which only generated about $45 million of free cash flow. Now, that's not insignificant, but for a $500 million project, it doesn't make too big a dent in your overall project equity cash needs. But with increasing that to at least 3 times from the gold we've now added to the resource, and we're continuing to explore for saprolite. So we're now beginning to see a method where we can make a big dent in what we need, which will give us some flexibility in how much project debt we have to draw down as we're constructing the rest of the project. Now, you'll also see here that we've brought the hydro in, which was not in the pre-feasibility study, but now, according to our project finance consultants, we would need $35 million of equity to construct that run-of-river hydro project. For $35 million investment, you'll save $500 million over the life of the mine in operating cost. I also mentioned you've got a lot of flexibility here, and you can adjust the size of the mine and the recoveries to be just about anything you want them to be. And this is, again, a picture of that pit, but you'll see we did our proven and probable ore reserve calculation at 1,070 an ounce. So there's lots of room there, even at 1,350, 1,300, 1,250. If you want to make the mine bigger, you can easily do that and expand the size of the footprint. Now, why do I mention that? That's not for us. That's for somebody that's looking to build a very big mine on a known reserve and resource base. Now, leverage to gold price. For the first few years after Frank Giustra got involved, everybody said, Frank, why are you here? And you heard a little bit about it today as well in terms of this is a big deposit. There's a lot of gold, and once you're in production and if you see a rising gold price, things change pretty dramatically. This is at $1,750 gold. You'll see we have a 1.5 year payback at that price. At $1,400 where we did the PFS, it's a pretty good project. Especially this is PFS without the benefit of the hydro and without the benefit of the additional saprolite ore and early gold production that we're talking about.
That 200,000 ounces, right?
Yes. And we've got $1,200 in here, and one of the reasons I put that in is when the market changed so dramatically in 2013, people didn't want to look at the economics. They just said, oh my gosh, it's 1 gram. This will never go into production. And that's been kind of the tag that's been on SANDSPRING for a while. And we think that the market will be looking at us a little more seriously now that the price of gold is improving. But I want to note that even at $1,200, while it's not a great IRR, of course, but the project still paid back in a little over 3.5 years. So it's never been an uneconomic project. It's been a challenging project, without question. But as the gold price continues to improve, there's lots of flexibility here. This is a good news, bad news slide for me. The good news, I think, for investors, if you're looking to participate in what may be a strengthening gold market, we're a tremendous value and a tremendous opportunity. If you look at other companies in our peer group, we're quite a ways down the line. If you look at where the average is with those who have published a final feasibility study, which we will do by the end of the year, there's a significant re-rating there. And if you look at our neighbor, Guyana Goldfields, in production, very good mine, no question. Very good operation, higher grade than Toraparo, but same region, same challenges, same level of lack of infrastructure. They're producing their own power, et cetera. You'll see that they're doing quite well in today's market. So this chart, I think, shows you why Frank Giustra decided to get into SANDSPRING back in 2015, and why Wheaton Precious Metals believes there's a great opportunity here. This is another metric that's been prepared by Bank of Montreal to help us figure out where we sit in and amongst all of these other large deposits that are yet to be developed and some that have been developed. But this is what they call Capex intensity. And really it's what's a dollar get you in terms of leverage to the gold that's in the ground. Yes, and you'll see here that we fit in very well in that metric. Corporate snapshot, again, you see Frank Giustra is our largest individual shareholder. We've had great support from Conwave here in Switzerland, and they've been just a really good help to us and me personally. Here's a quick construction and production timeline. We'll be final feasibility by the end of the year. The variable that we're working on is when we would start that saprolite production. So in conclusion, somewhat in the reverse order of what I presented, there's tremendous leverage here. It's a great, easily produced gold deposit, and there's a lot of gold. Thank you, ladies and gentlemen.